Hi, I'm a professional day trader. My name's Cotton Candy TA. I'll take the profits there. It's like 8,000 in profits. Oh, we're coming up to our target. What did I make on that trade? 550? It's not bad at all, actually. I've been doing it for over a decade, and I've made a comprehensive guide that's going to take you from zero to hero, or from making nothing in day trading to making millions of dollars a year. I have pretty much uncovered every single corner of this industry, and I wanted to make a complete guide that would cover absolutely every corner, no stone left unturned. So if you make it from the very beginning of this video to the end, you're gonna have a direct path to have a lifelong career in day trading and be quite successful doing it. Now, it's not gonna be easy. I'm gonna warn you, I've got a ton of work that I'm gonna have to go with you over the next hour, and we've got a ton of stuff to do. I'm taking every single thing I know about day trading, jamming it into one guide so that if you can sit here for an hour, you're gonna be on your way to being a professional day trader. So enjoy and good luck, because you're gonna need it. Okay, so there's gonna be 6 chapters that we go through different things, and I'm gonna list them off for you right now so that if you wanna skip to a section in this guide, I'm sure people are gonna watch it many times. This will kind of be like your glossary or an anchor point to say, okay, this is what chapter 1 was all about, 2, 3, 4, 5, and 6, and then you can use the bookmarks and thumbnails and all that stuff to just surf through the chapters. So in the first chapter, we're gonna talk about how and why to use community. In the second chapter, we're going to talk about how to learn TA and where to learn your technical analysis. In the third chapter, we're going to talk about exchanges and brokers and what to use and where to trade. In the fourth chapter, we're going to talk about an example of what day trading looks like day to day. So what your life ideally should look like to help people kind of guide them in scheduling and stuff like that. In the fifth chapter, we're going to talk about mental analysis and how to kind of keep your cool and keep your mind all wrapped up nicely and tight so that you have the best performance. And in the sixth chapter, we're going to talk about just living life as a day trader and kind of what the career looks like. So long term, and you're sitting here deciding, should I become a day trader? Should I not become a day trader? Well, this is going to show you what the life actually looks like from a realistic standpoint, not the fancy cars and private airplanes and all that junk. So let's get right into it in chapter 1. So use that as your glossary going forward. Yeah, let's jump straight to chapter 1. Okay, so chapter 1. How and why to use community. So this chapter is all focused on community and the benefits of a community. So before you kind of start your career in day trading, you want to, or even starting to learn about it, you kind of want to immerse yourself into a community first. You want to ideally be around like-minded people. Just like if you were in university, you kind of want to be around other like-minded students who are learning at the same pace. Like just if you went into university one and you're around a bunch of people who have no clue what they're doing and everybody's like, oh, damn, like I just got here day one class, and you just kind of want to make a few friends just so you have someone to bounce ideas off of and just to kind of feel at home, to kind of identify with the culture in the world. So, surrounding yourself with community is really important. Now, another benefit to community is that you want to be around other more influential and more experienced traders, so that when you do have questions come up, say, for example, you're in class, something is way over your head, you're not understanding it, you have other people to ask to say, hey, I didn't really get this. Can you help clarify it for me? You get a lot of that in day trading. The learning path is pretty big. So before you start learning, you just kind of want to evolve yourself in a community and just be around people where you can say, hey, my name is Sam, or whatever your name is, or your screen name, Light Post Bobby, or whatever your screen name is. You want to just be around people and introduce yourself and have those resources available to you. So when you get stuck, you're not facing it alone, because when you face it alone in day trading, it costs you money. If there's a problem that you don't know the answer to and you're just guessing, well, those guesses, they cost you money. So we want to kind of eliminate as much of that as possible. We want to minimize the amount of guesswork that you have to do. So you want to be surrounded by community members who are on the same path as you and other people who can also help mentor you. So with that said, I would recommend joining my Discord community. I don't know too much about the other communities in the day trading space, but what I do know is that if you're learning how to day trade, you kind of want to be around people who are learning the same material as you. You wouldn't want to be getting guided by community members who may be learning something completely different. That would be the equivalent of being a student in dentist school or in law school and asking a mechanic how to fill a tooth or how to file an injunction if you're a lawyer. It just doesn't really make sense to kind of mix those barriers. You're going to get the wrong information. It's just going to be a big mess. So when you're learning, you kind of have to pin them hand in hand. Like, where do you want to learn? Join that community. The worst thing you can do is, where do you want to learn? And then be a part of like 10 or 15 communities. Because again, it would be like being in dentist school and starting to ask people who are in architecture school, maybe how to do a filling, and then asking somebody who's in biochemical sciences how to do a crown molding. Like, it just doesn't make sense, right? So you want to be around like-minded people. For that reason, I would suggest using my community. I'll leave the Discord link on the screen here, and not only on the screen here, but it'll also be in the comment section. It's free to join. You just join the community, and you're going to be around like-minded people who will also be able to help and mentor you. So that's a really important thing. Involve yourself in community, just immerse yourself into it. Jump in the Discord, say hello to people, read the rules, be like, hey, my name is X. This is where I'm at. Here's where I'm day trading. You're going to link up with other people who are like-minded friends, and you're all going to be able to help each other push faster, because at the end of this, the goal is to make people better day traders quicker and to have them have more success in shorter periods of time. So that's going to be like my number one recommendation for community. Just join my Discord. We have thousands and thousands of members. And again, it's just all free. You just click a few buttons, bang, you're done. You're in it, you're immersed, you're chatting. Say la vie, you're done. So that's the first thing community wise. And then what I will do is I'm going to say, like, now that you're in the community, so that takes care of why you want to join a community and what community to join. This is going to be the best experience you can now get inside of the community, and how you should kind of manage yourself, and how you should kind of say, like, okay, what can I do to maximize this? What can I do to get the most returns out of it? I'm in a community. How can I vampire, suck everything I can out of it, right? So that's kind of how you want to look at it. So what you want to do now is you want to say, hey, my name is X. This is what I'm learning. I'm here. Is there anybody else who's kind of at the same place? Look at all the different channels. Like, we have channels for, crypto. We have channels for stocks. We just have open channel. Talk about your experiences. Say, hey, I'm on lesson 3. This is what I'm learning. It's super cool. Even just the action of typing out what you're learning is helping embed it into your mind. So when I mentor people, and I have coaches who mentor people, and I've been doing this for like 12, 13 years now, my coaches who I train, they learn the most and have the biggest leaps in performance and progress when they start teaching others. Now, it's not the fact that they're teaching them, it's just the fact that they're repeating the same things over and over. So like, it'll become a really good thing when you can kind of just open dialogue about what you're on. If you're on lesson 3 and it's, say, for example, I don't know, or whatever lesson you're on, it's about hold levels, for example, you should type out in chat, hey guys, I'm on hold levels. I thought it was really cool that when price comes to a hold level, there is also smaller time frame hold levels underneath it that can also support the move. So like, which one should I go after? Or even if you don't even have to say which one, you don't even have to answer it with a question. You can just type about it, talk about it, and it's going to help it ingrain into your mind. And then you're going to open up dialogue to other people. So you kind of want to have this constant revolving dialogue around the things you're doing all the time. This makes it as much like a university level experience as possible, because those are your classmates. And by just talking about it and having these revolving conversations, do that with every single lesson. Just create this wealth of knowledge for yourself where you're just constantly talking about it. So that's how I would use a community. And then if you want to unlock more community stuff, I have a patron page, and there's like more advanced levels and stuff like that. If you want to become into mentorship or into coaches and call out groups and stuff like that, you can get into that. That's, for you to peruse on your own time. I'll leave the patron link here if you want to join it, but you don't need to. By all means, you can just join the free side of Discord, and then there's a paid side. It doesn't matter. As long as you're just in it around community members. I have people who have been there for like 5 years. I've been a free member for all 5 years. I have people who have joined on month 1 and they want to take the most highest advanced level to get all the access. It doesn't matter. It's completely your own call. It's not needed, but the point is that you just start immersing yourself. So that's it for community. Let's move on to chapter 2. All right, now let's talk about how to learn TA and why you're going to want to learn TA. This is going to be a bit of a bulkier chapter because we're going to have to go through quite a bit, and there's going to be tons of resources and links. So I just want to start this chapter by saying, hang in there. It's going to take a while to get all this information out. And if you get lost in all this, I'll try to make it as easy as possible. But if you get lost in all this, I'm going to have in the description of this video kind of every single thing that I list in order. So you'll be able to say, okay, I remember he talked about level 3 and that says level 3 right here. So that's what I need to go to. So I want to talk about why we learn TA and how to learn TA. So before I get into where to learn it, let's talk about why we should learn it. Technical analysis, which is TA, is everything that controls the day trading stock markets and everything that always has from 200 years ago to now. So the things we want to avoid just to start is any kind of signals groups. So you're going to see this all over the internet. People are selling signals to trades, and they're saying, well, for $20 a month, $30 a month, you can join our signals and make all this money. And like even I offer that too for my more advanced members, but that's not a good way to build a career. If you have to rely on somebody else to give you signals, what happens if they get into a car accident one day and your career is built off somebody else's signals, and then all of a sudden they're gone and your career is gone? Like, it's not a very sustainable way to live. And you're also just trusting other people. It would be the same thing as just blindly throwing a dart at a dartboard, and wherever it lands, that's the kind of stock that you go into. You should never ever trust anybody else. You should always do your own research, do your own charts, do your own technical analysis, and make the decisions on your own. Because if you learn properly, you should be like, if you take my courses and learn properly, you should be better than 99% of people out there anyways, because my courses are very deep, they're very intricate, and they're very tough. But after, 6 months or a year of studying, you'd be better than 99% of these signals groups anyways. Matter of fact, there's thousands of signals groups out there that just use my course material and just reshape it to make signals groups out of it. So a solid chunk of our industry is just made up of signals groups that have learned from my courses anyways, who are doing it haphazardly. So you're always going to be better to stay away from that, learn on your own, and then make your own decisions so that you have control of your career and control of your own finances. So when you want to scale up and make $5,000 a day, you can, because you know how. And if you just start at $10 a day, you have a very direct path to say, okay, I'm making $10 a day. Now I need to make $100 a day. And now I need to make $300 or $400 a day. So you have a direct controller over your own career. So that is important to know. So stay away from signals groups. We never use indicators. Real day traders don't use indicators, because now I'm not saying you can't make money using indicators, but they're a very poor way to do things. It's like you have a mechanic who is been doing it for 20 years, who's a pro, who can tackle every problem, who knows every single thing to fix on a car. They see a car and they're like, oh yeah, just by the sound, I know what's wrong with it. Versus somebody who has just gotten their first wrench set and doesn't really know what they're doing. Is just kind of taking things apart to kind of figure it out. It's the same thing. Like, you can make money using indicators, but it is such a poor way to do it. It is so unoptimized. It is about 5% of the results of actually doing it yourself. So just like indicators, stay away from them. It doesn't matter what it is. We don't use moving averages. We don't use VWAPs, EMAs, SMAs, RSI, divergence. There's always a new indicator coming out in the market that's the next best thing, but they all suck, because you can be accurate 90+% of the time if you learn how to do technical analysis properly. And the fact of the matter is, indicators are a business of their own. So people make indicators to sell them to make money, or they make them to get more views on a trading software, because that trading software then gives them a kickback. So releasing indicators is a business model of their own, and they don't really work. Again, you can make money, but if you were making $100 a day with an indicator, that same trader, if he learned technical analysis properly, he can make $5,000 a day instead of $100 a day. So you're really shortcutting yourself. So do not use indicators of any type. We also don't trade anything to do with the news. The news makes no difference in our day trading careers. I don't even look at the news. I have like a 95 to 99% accuracy ratio on a chart. I've been doing it for years publicly. That's all cross-checkable. You can go take a look at old footage of mine on streams, on charts, even in my courses where I've called things out. My accuracy ratio is insane. It's not to brag, but it's just to show that I don't ever look at the news, and neither do any of the good traders that I know. I've been doing this for 12, 13 years, and I've met thousands, if not tens of thousands of traders who are making over $10 million a year, and traders who are just starting their career. None of them use the news articles. Very rarely do I come across somebody, but actually when you get using news articles is kind of like this amateurish thing to do. It's like when you first start day trading, you're talking about, the new points are coming out today, and oh my god, the Dow is doing this or whatever. That's like really fun and exciting, and kind of like a lost puppy dog, or like a University 1 student talking to somebody studying their masters on their final year. It's like, okay, dude, yeah, cool, man, points are coming out today, the federal meetings, yeah, cool, dude. Like, it's so amateurish and puppy doggish that once you get like a year into day trading, you're just gonna be like, why did I used to talk about news? This shit doesn't make any sense. This stuff all happens before the charts even show the news articles anyway. So save yourself the hassle and the embarrassment of being like the news trader and the guy that everybody looks at. Like, you talk about news and all the real traders in them are like, that guy's new, like, save yourself that embarrassment. Don't use the news. So those are the couple things you want to stay away from. And everything on the charts is controlled by technical analysis, which has always been there for hundreds of years. Before computers are around, they used to record it on paper. That data has now been put onto charts. You can go and take my science and back test it back to the early 1800s, and you'll see that all these same events that have been happening for the past 200 and 300 years, they're still happening. So there's a science that controls the markets, and it's called technical analysis. So you have to learn what controls the markets in order to know where the right spots to buy and sell are. So it's a very simple equation. So technical analysis is what you want to learn, and that's why you want to learn it, because it'll give you an accuracy that nothing else in the world can. And those are some of the things you want to stay away from. So with that big long-winded explanation, let's actually get into where to learn technical analysis now. So you're going to want to learn it on my channel. I've devoted my whole entire career to cracking the stock markets, to reverse engineering them, to back testing this stuff, to creating a system that people can follow. And I released it to the world for free. So it's all on my YouTube channel, the same channel that has all my content. And I go through absolutely everything in a very in-depth way. Now, a disclaimer is that it's not going to be something where you can watch 1 or 2 videos and you're going to be bang done. That's it. That's not realistic thinking. It's not realistic to say, hey, I can make $1 million a year as a day trader by just doing an afternoon or a weekend of work. It's just not, it doesn't align with reality. So the disclaimer is that you might be studying my material for a year by the time you get through all my videos. I have like 300 videos and they're all like 1 hour to 2 hours long. Some of them are 15 minutes, some of them are 4 hours long, but they're all different forms of technical analysis. We're not talking about videos where, one video I'm talking about, hey guys, look at my new car. And another video is like, oh, this is a quick little hack that you're going to want to do. No, these are like 300 lessons of hardcore studying. This is data point X. So when data point X hits, we call this a hold level. And if this hold level hits, then it's going to go to the other side of the chart here and mirror it as a Pandora's box. And all these terminologies that I've created, I've spent a lifetime reverse engineering this stuff and a lifetime creating it. So it is a hardcore, deep set of science and rules that you're going to want to learn. So don't expect it to be done quick. And if you're not here for the long haul, if this doesn't sound like it's for you, that sucks. I'm sorry to hear, but I don't want to sugarcoat things. If this sounds too hard for you, you should just stop the video now, go somewhere else. But if you're ready for the challenge, ready to learn, and ready to have a real career where you can make 7 figures a year, you can learn how to be a real day trader without the fluff in the industry, without all the stuff they try to sell you and feed you, all the things where it's like, here, join this course or join this mailing list, or just $25 a month. If you want the real way to be a day trader without all the modern fluff where people are trying to just monetize on it, then watch my courses, because it's going to teach you everything from 0 to 100. And if you don't believe me, join the Discord, which is free. And we have like 5,000 to 10,000 members in there, and just ask them. And every single member in there is going to be like, no, cotton candy stuff is, I wish I knew it sooner. It's the best I've ever had, blah, blah, blah. They're just going to tell you the truth, just like I am now. So with that said, now let's go into how to learn these different things and where you're going to learn them, and how I've set it up to structure to help you to learn this stuff. So I create my lists like this: level 1, level 2, level 3, level 4, level 5, level 6, and mentorship. So you're going to start at level 1. Level 1 is the lowest level where you're going to start from 0. So level 1 is going to be your beginner's course material. This is a long video. I'm going to get a drink here. Level 1 is going to be your beginner's course stuff. So level 1 focuses on kind of just building your foundation. It has everything from a setup, what you should first look at when you open your charts, and how to install the tools and what to look at, to just getting into some basic concepts like accumulation, levels, trends, targets, timeframes, level adaptation, and a little bit of trading. So level 1 really is just, I'm just learning how to day trade. I need to start from 0. I don't even know what programs to use. Level 1 is where you want to start. So level 1 is 8 courses, and it's not going to take you too long because I made it very digestible. And that's where you're going to want to start. Then when you're done level 1, obviously you're going to move on to level 2. And level 2 is going to be kind of like the more advanced form of level 1. It's saying, I just learned how to trade. I've just started to mark levels. I've completely brand new. I just started this week. I actually know some terminologies now. And like I know how to draw a level. I know how to draw a trend, and I know why we do them. Level 2 is going to start to emphasize on that a little bit. It's going to say, okay, you learned those things. Now let's tweak them a little bit for a more advanced setup. So now we're starting to become professional traders a little bit. Not professional as in we can make money yet, but professional as in these are just more advanced terms that we can use. And it just kind of gets us to a place where we're not lost. Like if you were in a community and you're talking about things, you could keep up. You would know all these terminologies. So it kind of lets you look at a chart and keep up with everybody else, right? All the advanced traders. Now there's kind of 2 sections of level 2. The first half is that pro stuff that I just talked about there. The second half is all mental analysis. Now I like to really break mental analysis down for people from an early place, because I don't want them going and doing 5 months of work to think like, oh, this is it. How do I deal with all this stress? How do I deal with the losses? How do I deal with the gains? I want people to understand that mental analysis is a huge component of our journey as day traders. So I have a mental analysis course in there called Mental Analysis Evolved. And I created a system called devices. And devices is an acronym for dexterity, endurance, vitality. The I is intelligence. Wait, yeah, okay, I spelled that right. Sorry. C is charisma. The E is, what is the other E? Energy. And then the S is strength. And I think I spelled that right. I don't know. I probably have some stuff in there. And so I made a system called devices. It's an acronym that we can use to better help understand how our mind works. So I have everything from roadblocks. I deal with roadblocks in there, how to have more energy in day trading, how to have a stronger mindset, how to use your intelligence and what to filter and what not to filter for thoughts, how to become trading longer, how to survive longer in trading. So I really wanted to take almost like a video game kind of acronym and create a set of mind tools around it. Now, I look at mental analysis a little differently than most people. There's some books and stuff that have been published. I won't get into like books from the past that have been published, but a lot of stuff when you think of mental analysis and how to trade and the cues of our mind, when you think of that stuff, you think a lot of, most books will give you pieces like this. Oh, don't stress about trading. You can't control it. So they're kind of just like afterthought realizations. So it's like, don't stress. You can't control the outcomes. Don't get upset if you go and get on tilt, or if you go and you're flying off the handles, you're going to lose more money. So you need to step away and take a break, take a breath. It's more post-realization. It doesn't really build any tools to help you become a better trader in terms of mental analysis. Instead, what I try to do is I try to tackle things like brain fog and how to reduce it. I try to take a proactive approach on mental analysis, and I try to use it to create tools as almost like a mind science. Just like my day trading science, I kind of like to think of things in terms of science as like, how can we have more energy in trading, right? Like, how can we make better quality decisions? So what times of the day is it most optimized to trade? And if we have a most optimized time based on our bio clocks, then how do you increase the efficiency of that bio clock time? So these are like proactive ways of thinking about mind training or mind sciences, tweaking the way that we can use our mind. Or how do we reduce brain fog? How can we proactively make sure we never get brain fog, right? Things like that. What are roadblocks and what are environmental triggers? Things like that. So I take a look at mind sciences very differently. And I think this is really important for level 2 to go and learn about these things and to constantly come back to this part of level 2 and just retrain it, because the mental analysis work that I do, it probably took me a solid 6 to 9 months to develop all this stuff. And it's a quick, I want to say it's like 12 videos. I think it's around 12 videos, and they're, 10, 12 minutes each, but they're golden nuggets, and they have been the anchor points for a lot of my really professional traders. And people have come back to me years later saying, I didn't realize how important your work on mental analysis was. Like, it completely changed the perspective of how I see the day trading charts. So that's level 2. So you are going to come back to level 2. Now let's move on to level 3 here. Level 3 is what I call the future of trading. So this is like your first advanced set of tools. So level 1 and 2 focus on how to just set up, and almost like year 1 of university. Level 2 breaks you into your first specified task set. So now you have things like hard close, the effect of time, break levels, hold levels, really the professional tools that we start to use as day traders now, the things that we'll start to use for the rest of our career. So we're building the foundation in lesson 3 of these are the tools we use, but here's an introduction to them all. So level 1 and 2 catch you up to a place where you could understand what level 3 looks like. And then level 3 builds the tools that we use forward for the future of everything we will need to do. So level 3 might be a good spot to start for somebody who's already been day trading for 3 or 4 years, somebody who's already in the field but isn't successful, or somebody who's like, oh, I'm successful, but I want to become more successful. And I want to learn really how the charts work in the deepest form of technical analysis that there is. Level 3 would be a good place for that person to start. Or if you're new and you've done level 1 and 2, these are going to be like your tools that you use for the future. So if you're a doctor, your stethoscope, your heart monitor, it doesn't mean you can't learn more about them, and there's more deeper forms and how to cross combine those with other tools. But this is those tools that will founder the building blocks of your professional career. So that's level 3. And then we get into level 4, which now we start to have a definement in the way that day trading works. So the way I see it is there's 3 lanes in day trading. So you have 3 separate lanes in the way that day trading works. You have procedural analysis, and procedural, which is I call PA, is everything that happens before a trade, which is your level 4. So now that we've learned the tools, we're now going and breaking that away from that structure of, okay, here's a set of tools in a very chronological way, level 1, level 2, level 3. Now we're breaking into a more advanced form of day trading, saying, okay, now that we understand the tools we need, now we need to understand the ethos of trading, or like how the lanes exist. So the first lane is everything that happens before a trade. The final lane is everything that happens after a trade, and in between, which is the second lane, which is right in the middle, is everything that happens during a trade. So we kind of have 3 different areas where these trades live and exist. So 3 lanes of trading. So level 4 breaks into the very first lane of trading, which is procedural analysis. So this is understanding everything that happens before a trade actually executes. So all the setup that you need to do, all the different types of things you should look at to understand what to do in the moment when that moment occurs. So this is called PA, procedural analysis. And that's all of level 4. You're going to be talking about things like timing, bankroll management, how to define a market, where expectations should be. So everything that you can think of that would happen before a trade, that's your level 4. Now we go into level 5, which is a course I call butterfly effect. This is the second lane of trading, which is comparative analysis, so CA. Now comparative analysis kind of flows from lane 2 to 3 and back and forth. But butterfly effect is comparative analysis, right? So we need comparative analysis to understand how to compare the events of what happened in the past and the current moments. Like if Bitcoin, for example, is flying out of its mind and it just jumped 10% up, you have to understand where it's going to its next target, because it might have blown through 3 or 4 targets. So comparatively, you have to see what's happening in the moment to best understand what's going to happen next. And for this reason, I call this CA, which is comparative analysis. So this lives inside of that final lane because you're constantly comparing events at the end of the trades. So remember, procedural analysis, which is lane 1, that's everything before. Comparative analysis is everything after, which is, and it flows into the current as well. So it kind of shares 2 and 3. So this is comparing the events of the current. And before we jump forward to level 6 and all that, we're going to talk about the middle lane, which is risk assessment, or RA. So procedural analysis before, risk and how to assess it during the trade, and then comparative comes right after risk. So it's almost kind of like lane 2.5 and 3. So then you have everything that happens before, during, and after the trade. And then it just goes into a full circle cycle, because after the trade is actually what happens before the next trade. If you were to just say, oh, well, the next trade is going to come, then you get back into lane 1 because the trade has happened and you're now looking at the third lane, which then turns into lane 1. So it's kind of like this full circle thing where it's this perfect cycle, right? It's how day trading works. So level 5 gets into comparative analysis and all your really advanced tool sets and how to use them. Taking what we learned in 3 and then building on top of 3. So as if you were building a pyramid, your pyramid starts at 3, and then understanding how to build that pyramid and creating a map, that would be like level 1 and 2, but you're actually building the pyramid at level 3. And then level 5 is actually starting to build those blocks on top. So now you're starting to like fill in more advanced forms of day trading. And level 6 becomes a more advanced version of that even. So comparative analysis is really where our focus lies hugely in day trading. Because if we think of lane 2 and 3, which is risk assessment and comparative analysis, those are the 2 things that happen after a trade that we constantly have to be processing data, thinking about, and really looking and saying, okay, what's happening next? What's happening currently? How is this affecting my current trade? Because trading is not a set it and forget it type of thing. Trading is a hit a target, enter a trade, and then look at the variables that have happened to best decide what the next outcome is. You can't just, it's not a pot roast. You can't set it and forget it. There's forms of trading that you can do that, but we're not talking about that today. That's like scalp trading and position trading. And I go into that in the courses. So actually in level 5 and 6 and 4, you can go and see all that stuff. So that's actually covered inside the courses. No need to talk about it in this video. So level 6 is an even more advanced form of comparative analysis where you're getting to the actual final nuances, the things that would, separate somebody who would be still in university to somebody who's been doing it 15 years and is acclaimed as one of the best in the world, right? Like that's the difference. It's the same comparative analysis Q set, but you're really getting into like the hardcore lessons and the hardcore training where you actually learn even deeper and deeper things. So that's kind of lessons or levels 1 through 6 and how you should look at them and the ordinance that you should take them in and why you take them in those ways. Beyond that, I have a risk assessment guide and risk, which is that second lane. I have a risk assessment guide and a stop loss guide, which I'll also link in the video, which kind of go hand in hand with that second lane, that risk analysis. So outside of level 1 through 6, I have a few videos I'm going to recommend where they're a bit of a bulkier video. It's like an hour, 2 hours long specifically, which is like a guide on risk, a guide on scalping, things of that nature, or stop losses and why we would use stop losses the way we do. So those are going to be outside of level 1 through 6, and you take them at your own discretion. Like I would take at level 4, when I completed level 4, I would take the stop loss guide. When I completed level 5, I would take the risk assessment guide. And then at level 6, I would go and take that stop loss and risk assessment guide again, which will be linked in the description. I would take those same two again, and I would take them a second time. So I refresh my knowledge on them, because those are two kind of critical components. Now we get into mentorship. So I do have also mentorship that I have as well, which I'm going to put those lessons in here also. So then there's the mentorship videos that you're going to go through. So there's like 35 or 40 of them, something like that, where there's mentorship lessons, which are all accessible, by the way, as well. I'll leave the link in the description of this video. And I have mentorship lessons where you're going to go and you're going to use those mentorship lessons after you complete level 6, with the understanding that the mentorship lessons are all on level 5. So I go through every single lesson on lesson 5, because there's about 70 or so lessons. Some formats I have them condensed to be 30 lessons, some it's 70. On YouTube, I believe it's 75 lessons. So I go through in mentorship, and they're long lessons. They're about an hour to 2 hours. Some of them are 3 and 4 hours each. And I'm going to go and say, okay, this was level 5, lesson 1 through 3, for example. And I'm going to go and talk about that for 2 hours. So what you need to do with the mentorship lessons is take them either in conjunction with level 5, right? You need to either take them beside level 5. So you do level lesson 1, 2, and 3 in level 5, and then take mentorship lesson 1. So you need to either connect them hand in hand, like finish 1, 2, 3 on level 5, and then say, okay, I finished those. Now I want a deeper understanding. Let's take mentorship. Or just complete all of 5 and then complete all of level 6 and then take mentorship afterwards and then complete level 6 again. That's the way I would do it, because it's just a more compounded set of knowledge. I would go level 5, level 6, all of mentorship, and then level 6 again. Personally, that's how I do it, but you can do either way. I think you're going to get the same kind of benefit doing either way. Maybe this way you get a little bit more benefit because you're doing level 6 twice. So you do it once before mentorship, you take mentorship, and then you do it again after, and it's kind of like just ingrains it further into your mind. And that would be like how you learn technical analysis from 0 to 100. And then just keeping up with my platforms and saying like, oh, he just released a new lesson, let me take that, right? Like I'm obviously going to continue to release knowledge, but like there's people who are done level 5 and they make 7 figures a year. There's people who are done level 6 and they make high 7 figures. We're talking about 5, 6, $7 million a year. So this is more than enough, even if you were to just stop at level 6. Or even at level, well, I wouldn't stop at level 5. Like why? Why when you could just be better? If you were to complete level 6, that would be more than enough. And mentorship, that would be more than enough to give yourself any income that you desire, or work for any firm in the world. Be hired by the best firms or just work for yourself. That is your whole entire chapter 2 markdown. It's been a long chapter 2. That's the entire markdown. But that is everything you're going to want to learn in technical analysis, how to do it, the steps to follow it, what you're going to learn, and why you want to learn it in that queue. And don't forget to go back and do level 2 mental analysis again, over and over. It should be a normal routine, just a course that you're constantly taking. And it's like, oh, this is a refresher. Oh, I want to do mental analysis. Oh, it's good training for my mind. Oh, I've done it 6 times. Shit, I'm really successful. Let me do it a 7th time, right? Like that's a good way to look at it. So let's move on to the next chapter. Okay, chapter 3, softwares and exchanges, what to use. So softwares, this one's going to be very easy. You don't need to go out and buy all these extra things like trading journals and stuff like that. I'm going to include a trading journal format that I use, which is just a simple Excel sheet. I will share a link for a just blank sheet that you can download and use. And it'll allow you to kind of take note and track some of the things you need. So trading journals and stuff like that, we don't need to worry about. I'll get to that a little later on here. There's no other softwares or things you'd want to download, no like algorithms or bots or anything. That stays far away from all that stuff as you can. So for softwares, the only thing you really need is TradingView, tradingview.com, which is where we do all of our day trading charts on. So tradingview.com, you can use a free version. You don't need to pay for any of the extended versions. Everything you will need on TradingView is available on the free version. You don't really need alerts. I'm not really a big fan of alerts, because the thing about alerts, even though some people say like, oh, alerts are great because I can get a message from my cell phone, and it can be 4 in the afternoon and I'm not trading. The thing about day trading is you want to create a stabilized routine and not live your life around alerts. I find this is something that newer traders do, is they have alerts on prices because they're waiting for certain moments to hit. But really, the reality of it is that as a professional day trader, you should be able to, wake up at 8 a.m. or wake up at 5 a.m. or whatever time you wake up. You should be able to go on your charts for 3 or 4 hours, take your trades, walk away. Not have to walk away, take 2 hours away. Alerts are going to your cell phones. You run back to your office or your trading room or your basement or garage or wherever your trading station is. And then you're sitting there and you're sinking another half an hour into it. And then you leave, and then you're managing trades while you're in your off time. Like, this isn't a healthy way to day trade. It's not a healthy way to be a day trader. It's not a healthy routine to have. So really what you want to do is you don't really need alerts. You want to be having like your 4 or 5 hours, or even 2 to 3 hours, or 1 hour if you can accomplish it in 1 hour of just straight trading time. And then outside of that, you want to just say like, okay, I'm not trading. Time to be a normal human being. Because how crappy would that be a career as a mechanic if you worked your 8-hour shift and then you were also on call 24/7? And it's like, well, dude, I need to have a life too. So it's not really a healthy thing to get into. So I don't really see a lot of paid features that I like on TradingView. You don't need more than one window, maybe two. So like the 2 split screen on TradingView where you have side by side. Some people say like, oh, I need 4 and 5 and 6 and all that. You really only need one chart. You don't need to watch multiple at a time. You don't need any additional indicators. You don't need any additional time frames. Like, most of this stuff is available on the free version of TradingView. I would say for 9 out of 10 people, they would probably be perfectly fine with a normal version, and you wouldn't be at any disadvantage by using the free version either. The only things that you get for the paid version that are kind of useful is no ads, because I hate seeing the ad pop-ups. They really are distracting for me. So that's helpful. And the replayer tool is good. Outside of that, there's nothing. You don't need extended time frames. You don't need all the stuff that they try to sell you. You don't need it. So at the most, you should be getting the very cheapest level subscription you can on TradingView if you find you need it. So if you're doing really well and you want those few features like the replayer tool and the no ads, great, use it. Replayer tool can be a great training tool, but other than that, there's not a lot you need. I find TradingView, for the most part, 90% of the things they put on the website are pretty unusable and useless. So, hopefully we'll see a TradingView alternative one day that's nice, cheap alternative that doesn't have all the extra bloat that's useless. So for software, you really don't need anything. And what I'm going to do now actually is I am going to give you a quick little peek into what I do for, what I'm going to do is I'm going to give you a quick little peek into what I use for my trading tool. Let's make this nice and big so everybody can see. Okay. So really, if you're looking at, recording some data here, you don't need a trading journal. The thing I find about trading journals is like they import data and there's so much bloat that it just sinks up all of your time to kind of cipher through all that bloat, and it just kind of takes up way too much time to sit there and go through it all. And it's importing fields that you don't need, and then it just becomes a strain on your mind because you're trying to decipher all this information that's not usable. So I just have a simple Excel sheet here that I'm going to share with everybody. And it's just got your P&L. You have day 1, day 2, day 3, day 4, day 5, day 6. So if you really feel like you need to track your progress, which you won't always do, you won't always need to track your progress. But if you do feel like you need to, some people like to, some people don't. I don't think there's a benefit or a default either way. I think it's great as a mental analysis tool as you're training to use this. But again, and then some people, they just start becoming successful and they get away from it because they don't need it. The P&L, which is profit and loss, what time you start each day. That way you can say like, oh, hey, I have more profits on this day and less profits on day 3 because maybe I started at 8 a.m. here, and on this day I started at 10 a.m. and well, let's do that properly here, 10 a.m., right? So then maybe my profits were +4, that's fine. We'll go +4 on this day, and on this day they were only 1%, right? So let's say they were actually -1 on this day. So if I'm waking up later in the day and it's -1, there's obviously a misalignment there, a mismatch. Clearly, I'm going to be more profitable when I'm waking up early. So it can be a nice tool to help you kind of track those things and say like, hey, I've obviously making some errors here, and these are the days where it's higher. And then you can rank your mental analysis, your comparative analysis, your procedural analysis, your risk assessment, and your technical analysis. You can rank those 1 through 10 in here. Your market meta, which I get into in the courses, how good your market meta is, how long you've been trading for. So if today you traded for 3 hours and you woke up late and traded for 8 hours, obviously you woke up late, you traded for way too long, your whole day was consumed by trading, and you ended up making a negative profit. Clearly, this is a much better day. You have 4% profits total. You started nice and early in the morning at 8 a.m. and you had a 3-hour trading day and it was 4%. Bang, really good. How many distractions you had, what your diet looks like, your sleep, your focus, your macro diet, which is nutritions like vitamins and stuff like that. I'm not sure if that's the correct term, if it's macro or micro, but I believe macro is your nutrients. TS ratio is trading to studying. So if I trade for 2 hours and study for 4 hours, my trading ratio is 1 to 2, right? Because I have twice the amount of time studying than I do trading. And if this day, if it was, 3 to 1, for example, and I traded way more than I studied, I clearly over traded for way too many hours. So that means I traded for 6 hours and studied for 2. And that was obviously way too long of studying, waking up late. So you can start to see how you can cross compare these things. How much family time you spent, whether it's 30 minutes, an hour, 2 hours, how much flex time you gave yourself, the number of trades you took. Maybe you took 4 trades on this day. Maybe you took 26 trades on this day. Clearly you traded way too long, way too late in the day, took way too many trades. Time on TA, CA, PA, MA, number of scalps. Use these fields as you see necessary, but the benefit of this is being able to cross compare them. Number of scalps you took, number of swings you took, number of positions, whether you trade Forex, crypto, or stocks, what your accuracy was, how was your confidence level, and then a fun one, caffeine. Caffeine is like a nice one. Like, did you have tons of caffeine today or did you have only a little bit of caffeine? Maybe that has an effect on you too. So I'll leave a link for this in the in the description, but this can help you be a nice little piece of software, something that I do use when I mentor people, and something that I go through with them and we decipher it. But it could be a really cool tool to use, and it'll avoid you having to pay for like a trading journal, which I think is kind of a waste of money because they import all this data that you don't need, and it's like percentages and pie charts, and it's like, dude, yeah, I don't need that crap. I just need to be able to decipher my information and make myself better. Very quick and easy and fast way to do it. So that should like wrap up softwares. Now for brokers, you get into this big thing, like which broker should I use? And I'm going to put some links for brokers in the chat. I think there's a lot of brokers with different benefits. The big ones, I won't say which one I prefer. I'm going to have a different video completely where I'm going to go and I'm going to look at 15 brokers and I'm going to do a cross comparison and rank them. So I'm going to make that a separate video from this. So this video, what I'm going to say is the broker that you use, like Binance is going to be a good one for sure. I'll leave a link for the Binance referral in there. Mexi is pretty decent too, and BitGet. Those are 3 kind of good ones. So I'm going to leave you with 3 links in this video, but I'm going to make a full video on brokers in another separate video. But I'm going to leave you with a Binance link. I'm going to leave you with a BitGet link, and I'm going to leave you with a Mexi link. I think those 3 are good and safe to pick between those 3 for now until we can get into like a whole big hour-long cross comparison charts and stuff like that. But that's going to be a whole nother project. That's a whole nother beast. But I'll leave you with those 3. I'll make sure that each of them are set up to give you guys bonuses and benefits. Like, I think I can do like Mexi, for example. I think you get like $9,000 in benefits and bonuses. So maybe you want to go to Mexi and get those bonuses. And then on BitGet, maybe I can do one where it's like, the same thing, 9,000. So you might want to have both accounts and just jump back and forth to get the bounties. And then ultimately in the end, use Binance. I wouldn't use anything outside of those 3. I would probably say that for the safest bet, you're going to be on Binance. And for the, second and third safest, it's going to be Mexi and BitGet. But use those 3 for now until I can make a full video breakdown on this. But, the brokers, you should stick to the main ones. I will say a few words about this. You should stick to those main brokers because there's a lot of brokers that come and go in our industry, and the last thing you want to have happen is you have $10,000 or $50,000 or $2 million in an account, and then all of a sudden the brokerage disappears. It's happened before in crypto, and it'll happen again in all stock markets, not just crypto. It happens, right? So like you want to be with the bigger exchanges so that doesn't happen. You don't want to be going to the little unknown new exchanges. So I will recommend those 3 in this video, and then do another video taking like the top 15 and making a complete brokerage guide.
Okay, everybody, chapter 4, the life of a day trader. 7:20, I've had my coffee, I've had my breakfast, I've worked out, I've gotten ready for the day. I was up at about 5:30 probably, just so I can have a few hours to myself. And I only did like 20 minutes of cardio. I'll do a big workout later, but at least it gave me some time to myself to just, wake up, have a few calm moments, check social, stuff like that. But now it's time to trade, and it's trying to start for about 7:30 a.m. today. So I'll give you a quick little tour of the office. I won't do a full video that's going to show from morning till night. Maybe in the future here I'll do the life of a day trader, a full version. But I'm just going to talk about my office space today and what it looks like every day. So by 7:30 I come here. This is my guest house. I have kind of a couple different houses on my property here, and this is one of my guest houses. So I have a car lift in here, and I converted it from a mechanic shop to mechanics, kind of like a car lift mechanic thing, also into a gym. So throughout the day, whenever I need a break, I just kind of come down here. Maybe I'll hit up my exercise bike, do a few minutes of cardio. Maybe I'll lift some of my weight bags, just different things, right? Like I just come down here to get that little bit of solace. And upstairs is where my training cave is, or content creation station, or whatever you'd call it. So I think it's really important as we walk up there, I'm going to talk about this. I think it's really important that no matter where your space is or where you're trading, you have to take pride in that space and make it something very beautiful, something that you want to be in every day. I think that positive energy is definitely something that carries through in your trading success, right? So whether it's in a basement or a garage like mine, or a coach house, I should say, like mine, a secondary home, or an external office space, or even just like a bedroom, I think it's really important to have that really beautiful space to keep just to keep spirits up, right? Nice artwork, kind of got all the nice couches and plants and lights and everything like that. And I got my trading / content creation station kind of thing. Then I also have just like a nice kitchen here. If I want to get the coffee, or just make some food or whatever and do something else. It's just like a really nice space that I can go and chill out and trade. But it's almost 7:30 here, so we're gonna start trading soon. Let's go over to the office.
All right, so you just saw the office, you just saw a bit of a walkthrough, and let's just talk about what the day trading day looks like. I've got my chart on the bottom left side of the screen here. Can bigger for a second here so you can see that. And what I'm going to do here is I'm going to start to get to trading in a moment. But I just want to talk a little bit about my day and what the structure of it looks like. So again, I wake up pretty early. Usually I'm up sometimes even as up 4 a.m. I don't need to be, but 4 a.m., 5 a.m. I find at 6 a.m. I'm starting to go crazy. I feel like I've slept for, I don't know how long, but a long time. I feel like I've slept through winter. So by about 6 o'clock at the latest, I'm up. I'm exercising. I'm getting food. I'm getting coffee. I'm just doing a few things that I do every day. Like every day, I make sure I exercise just a little bit, just get my joints moving, just make my body feel good. After that, I get my coffee. I get my breakfast, something healthy, avocado, scrambled eggs on a wrap, something like that. It doesn't matter. Just healthy food in the morning, keep my mind active and fresh, and I keep my impact low. And the reason I do this, the reason I wake up so early, is because I like to have that bit of my morning time. My kids wake up around maybe 8, and I like to have that 1 or 2 hours to myself in the morning where I can wake up. I don't have to change diapers, and I don't have to feed 5-year-olds and get them ready for school and things like that. So what I do get to do is I get to just have that 2 hours to myself, where wake up, exercise. I don't have any distractions. I don't want to start filling my mind with a bunch of chaotic thoughts, a bunch of overly emotional moments, whether they be happy or sad. A kid stubs his toe and he's crying and you have to go fix it, or he's really happy because he just beat a level on Mario, just whatever it is. I just don't like all that emotional heaviness on me before I trade. I like to keep it as neutral as possible, almost as if I don't have, this is going to sound weird, but almost as if I don't have a soul before I'm done trading. Like I don't actually come alive on a personal level until I'm actually done trading for the day, which is weird to say. But it's like I get to stay as neutral as possible. I just get to focus on my 20 minutes of workout. I work hard. I'm focused. I'm tuned in. I eat a healthy breakfast. I get my coffee. I shower. I get ready. And then I jump to work, and nothing has happened on the day. And this is the best way I find to start your day trading day, because you're just completely neutral, flatlined emotionally. And you're just in a good space without any distractions, right? And it keeps your schedule very tuned in. So if you have kids or you have other obligations that happen a little later on in the day, Pro tip, wake up at 4 a.m., 5 a.m., get that stuff done. Now we start trading for the day. So it's about 7:30 now, maybe it's like 7:35 or something like that, my local time here. And it's time to start trading for the day. What time is it actually? Oh, it's 8:15. I have my time set a little differently here. It's 8:15 in the morning. Okay, so still pretty early. It took a little bit longer than I thought to record. So then my day is going to look like this. I'm gonna open up the charts. I'm gonna start looking at all the different ways that we can make money in the markets today. I'm going to be looking at some hold level stuff like that. I'm not going to go through too much, but obviously we just hit a weekly hold level here. Let's move this to the bottom like that. We just had a weekly hold level here, and we're going to need to look for what's next in Bitcoin. So then we would just simply start marking out levels and doing our job as a day trader to find the different opportunities in the market. Start marking out your hold levels. You got 1, 2 there. That would have been a nice little short opportunity. Start looking at lower time frames, maybe even going as high as this. Start color coding things, and yeah, c'est la vie. We're going to be off to the races, looking for some different opportunities in the markets today. Can't have this one. That obviously got hard closed. So you'd be something like this. So combination levels from here to here, and also to that. So you got a few levels on the charts. Yellow's 4-hour, red is daily, and purple is weekly. So obviously if the weekly holds us down, we're going to have a pretty good short opportunity here. So I'll be maybe looking for a short on this 4-hour here, and hopefully it can ladder the weekly, or might even look for some combo levels inside that. Maybe I'll even go to this hourly here. Might be a little bit better of an opportunity to get in. If I'm going to do 100x on this hourly was already hit, so no need to look at that. So maybe we even want to go 956, 992. So I'd go something about like this. I would go on this trade 84, 22, 984. That looks pretty good to me. Just like to front run the level a bit. And yeah, then we're looking to really get below this and close below this for the day. So I kind of have like a little plan about what I'm going to do next. And, you know, I think I'm going to take a long up to that level. So maybe I'll like to take a long from here to there. That's about 3%. Wow. And then hopefully ride that down for a pretty large move. So maybe, just maybe, we can go back and see where this kind of trail of levels exists. So what we'd be looking for, we'd be looking to see what level it hit back here, right? So you kind of start right here, and that hit that level there, and that's a 5-minute level. And then you've got this one right here. Has that been hit yet? Oh, you're back down to that 5-minute level. So the next level you'd be looking to target here would be, can't be this. That's already laddered the move. So that's going to move to here, which now moves to here, which laddered the move, which broke it down. So now you actually have to be time frame up. So you actually have to use and hold this, and then that got tested there. So yeah, I think you'd be right at that 15-minute level, something like this. I think this is a okay spot. I think it's a little risky. It looks like the move is about to collapse, but maybe even what you can do is you can use a pretty interior trend here. Don't know if you have anything else. You want to be using a 15-minute trend here. You want to use this one to that guy right there. We can delete this one and just redraw that. And you know what I'm doing right now is basically I'm just starting to look at those trade opportunities. So this is starting to look good. You've got your trend, you've got your hold level there, and it's starting to look like a good spot to buy, just as kind of like a interim scalp anyways, to get up to this level. Or once you hit this level, if you hit this level first up here, then obviously, you know, your better bet is going to be to ride it down to that level. And that's a good set of trades. So, you know, this is just a very quick look at a few things I would do on the charts. I'm not going to go too crazy with getting into technical analysis right now. We'll leave that for chapter 6 in this video, but right now we're just talking about the life. So I'm going to be doing stuff like this, so we can kind of make my screen smaller here again. And I'm going to be doing things like this on different charts, different stocks across the markets. Basically, I'm looking for what the best opportunities are every single day. It's 8:15 or almost 8:20 now in the morning, and I'm just going to be doing this for the first, say, 30 minutes or hour of my day, and just kind of setting up some expectations for the next few hours of what I think could happen. I might even look more localized in this move. I might even look right here to take a short. We can just increase this zoom again for a second so you guys can see. I might even look right here to take a short. I'm going to see how it reacts in the moment, but I would like to mark this level and then see if it can hold it for a few minutes. And then if it does, it would be a great spot to say, hey, like this would be a nice little opportunity for another short here. So I'm going to do this across altcoins. I'm going to do this across different stock markets, Forex markets, crypto markets. I'm going to basically for the first hour of the day here until something really exciting happens. I'm going to just be charting different things and hoping to get into some positions. I'm not going to force anything. I'm not taking trades just to take them. I'm only taking trades once they hit my levels. I'm not coming into my office and saying, hey, I have to take a trade. I have to make money. I have to do this. No, you want to take quality positions all day long, or at least for your 4 or 5 or 6 hours. If you find you haven't gotten any trades and it's been 3 hours, you might need to just step away for a few minutes and then come back for another 3-hour session. Or if you come early enough in the morning and you find the opportunities at the right time, you might only work for half an hour. So it kind of varies day to day. So you have to keep that in mind and what it looks like. And then, so once I'm done my trading, if it's a pretty easy day and I'm done, say it's 8:15 now, if I'm done by noon-ish, so if it's like a 3-hour kind of day, if I'm done by noonish, then what I'll do is I'll probably get an early workout in, keep that balance. What I'm not doing, which I talked about already in this video, setting alerts, coming back to my charts to look at these things. There is going to be the odd time where if I have a level like this guy here, where I think this is a pretty decent level, this blue one up here, I think this is pretty good. There's going to be the odd time where if it's 5 p.m. at night and I notice this is happening because I just randomly check my phone and price is kind of like around, it's just hovering around here, I might come back to my office for 45 minutes and see if I can get this trade. And then if it executes, just watch it for 15 minutes, make sure it kind of gains the level that it needs to gain, and then set a stop loss, pretty close to it. So there are some circumstances where I will do that, but this is a pretty extenuating circumstance because you've got a weekly level that was just hit right here. So that's what you're seeing, this purple line. It's a weekly level. That weekly level got hit, and it's not very often you hit a weekly level like from this has happened. If you were to wait for this level, you would have been waiting since November, the first week in November. So I mean, this is a pretty good not expectation. This is a pretty good exception to say, okay, well, look, it's okay for, once every few months to be a little bit of a chart hound and be looking at this level after. And right now, like I said, I would be analyzing this level to see if it can actually hold. And if that one can't hold, then I would start to look right here as well at this level here. So I'd be looking at these two levels. Again, I wouldn't take a trade on this level yet. I'd look and see if it's actually holding its move. It's not, it's kind of moving over it. So I don't think I would be getting into this move. Rather, I think I would be looking more towards this right there or this one right here, one of these two levels. I'd probably just be looking more towards, at this point, I wouldn't even have taken that trade. I'd be looking more towards this level up here, this 22,731. Maybe I might even take 214 just because it's a bit of a better trade. I think you're going to get the benefit of both trades. So regardless, we can just leave that. And again, going back to what the actual day looks like, if I have finished my day earlier than expected, so if I finish my day by noon, at this point, I'm really focusing on just mental analysis and getting my balance back. I'll work out at that point, and then I'll relax and get ready for the next day. And that's, the time after you're done trading, that's really up to you. But the beginning of your day and your day trading day, you should have kind of a pretty good grasp on. Wake up pretty early, trade for a few hours. If you have found positions, you can stop there and, you make your money and you walk away. If you haven't found positions, maybe take a break, rebalance, come for a second set. So some days you might have part-time days where it's only 2 or 3 or 4 hours, or maybe even just 1 hour. And then other days you might be in front of your computer for 8 hours, 9 hours, 10 hours. If you can't find a position and you're like, well, dude, I need to make money. Like, I don't have a choice here. Then you're going to have to put those hours in when the opportunities aren't there every single day, all the time. And the worst thing you can do is force these trades. You just have to mark your levels and be patient. And then, if you're having trouble getting into positions, try to open yourself up to also stock markets and different cryptocurrency coins, altcoins and Forex markets, commodities, Bitcoin. So if you're finding it to be not enough, then you can open yourself to other markets. I personally feel like trading Bitcoin is just enough because the thing is so volatile. There's always, every couple of minutes that goes by, it kind of seems like there's a trade on the book. So that would be it for this chapter. I think that gives you a good kind of roundabout look at what a day looks like. And again, this isn't meant to be what does my personal life look from morning till night. This is just meant to be a snapshot of office hours and what I do and how I do it. And the hours that you have to take and have to put in every day can vary. So it could be 2 to 3 hours a day. It could be sometimes 10, 12, 14, 16 hours a day. And then make sure that after you're done your work, that every day you're rebalancing and just getting in that personal time and doing all the things. You can't be working all day. You have to have set defined amount of hours. And you've seen how clean and light and low impact my morning is. It's very much wake up, I get ready, I come to the office, I trade, I make money, then I've earned the rest of that day. And that's an important thing. You've earned the rest of your free time that day. You haven't earned that free time yet for the rest of the day, take a break, go back and trade. Just like take your 15-minute break, get another coffee, juice back up. take that time to just reset and then go back and trade. And if you really don't make money that day because there's just no opportunities, that's okay. Our field is very fortunate that we can have days where we make $10,000 or $50,000 or even $1,000 a day. And then if you have 4 or 5 bad days in a row, it's like, okay, well, you get good days and bad, right? And the good outweigh the bad, and you have that buffer. So that's it for this chapter. Quick little snapshot of what it looks like to work every single day. As a day trader, you should be doing this 5-6 days a week if you want. If you want to make not as much money, but you value your free time more, obviously you could work to 1 or 2 or 3 days a week. But you kind of leave that up to each individual to make that decision. So on to the next chapter. All right, chapter 5, mental analysis. Okay, this is a big one. This is going to be an anchor or a linchpin or just this huge kind of focus point of your career. Mental analysis is extremely important because every single day as a day trader, and chapter 5 isn't going to talk about resources on mental analysis. I did that in the previous chapters. I believe it was chapter 2 I did that on when we went into level 2. But mental analysis, I want to talk about basically the way in which it can affect us and some just high level insight from somebody who's been doing this for a long time. There is a very big drain on our emotional and psychological mind. It is crazy how often I see people with suicidal thoughts, with extreme highs and lows, who develop anxiety, who doubt themselves. There's just a bunch of stuff I want to talk about when it comes to mental analysis and being safe and taking care of yourself. The first is that it's super important to have balance in your life. Before we get into mental analysis and some of the other cues here about what I want to talk about, balance is a huge point that I need to discuss from zero. As a day trader, we have to be able to not get swallowed up into this world. It's so easy to start day trading and it can become very addictive and it's very, very fun to do, and you can be making money and it's got a thrill to it. It's got this ride factor. It's got this, you get a trade and there's a high that happens with it, right? Because money's going up and you're winning your trades and you feel good. It's like dopamine maxed out. So you have to really be able to control that because it can founder a lot of addictive personalities. It can be very dangerous. So this is like a really important thing to talk about. And balance is a must in day trading. So like earlier in this, I talked about alerts from TradingView. Like I think that is a cardinal sin when you're thinking about alerts because it kind of founders into the addictive mindset, because then you're thinking about all day long, you're like, oh, when's the next alert going to go off? And you're constantly checking your charts and you're just always on your phone. Like you need to stay far away from this type of lifestyle when it comes to day trading. You can't be trading for 4 hours just to set alerts all day, just to leave to spend 5 minutes with your family. And every 10 minutes, you're checking price on your phone every 10 minutes, every 10. I know it's hard to say this because you don't want to miss opportunities, but trust me, as somebody who's been doing this for a long time and I've met thousands of people and I've had hundreds of people who have turned into 7-figure traders, if not thousands by now, or tens of thousands. And I've, the amount of exposure I've had to other day traders is a lot. I've worked with companies, I've worked with people on an individual level, on a large influencer creator level. I've seen it all over the place. The last thing you want to do, again, it's hard because it can become so addictive, is just checking your phone all day, picking it up, looking at it, checking price. Wow, look at price now. Even if it's for 2 seconds, swipe up, face recognize, go to it, check price, put it down. That couple seconds becomes this really bad habit, almost thinking of it like a smoker who always constantly needs to take a puff of their cigarette. Just like every 10 minutes they have to. They can't live life without that puff. And it's like getting in the way of their life. While I'm cooking, hold on, let me just walk away, take a puff, put it down. Like it's the same thing, right? Like it's just people around you. It might not affect you, but it will affect your family. It will affect your friends. It will affect your social life. You cannot be constantly checking your phone. You have to be engaged with real life and not constantly focus on your charts. And it's one of the reasons I don't like alerts and alarms. I don't want to get a text message when I'm not trading. When I have my 4 hours away to trade, I want to take those 4 hours. I want to maximize my time. And I want to use the mental analysis courses to say, here's my 4 hours. How do I maximize it? How, through technical analysis and mental analysis, which is chapter 2, how do I take that 4 hours and make the most of it so the rest of my day can be for me and my family and friends and social and fixing my house and those things, or watching TV shows, right? You don't want to be getting alarms all day long. So this is something really important to talk about, is balance. When you are trading and charting, leave it there. Leave it at the door. Trade, chart, and if you have a burn to do more, focus your mind for 3 or 4 hours after you're done trading on training in mental analysis, on training on how to optimize your mind, on getting better at technical analysis. So your 4 hours of trading stays your 4 hours of trading, and that's it. So that's one of the things, is like the addiction factor in living life. That's really important in terms of mental analysis, and having a stable, balanced life. Another one is diet. Of course, I'm going to give you the nutrition talk. Diet is important. Pick your diet, pick your poison for diet. Don't want to get into a whole thing where I do recommendations. You know your body, you know your health. The point is, prioritize it. Get good sleep, have a good diet, live a clean, productive, optimized life. And when you make money in trading, put it towards things like paying bills, investments, financial security. In day trading, sometimes we have bad years. You want to be able to sit there and say, hey, I've got 100 or 200K sitting in the bank extra. And so if I have a bad year, like, I can still support myself. And I'm not going, in the first time I make 25 grand, I'm going to go spend 20,000 on it on a new TV because that's hype. Like, yeah, cool, that's hype. Do that later. Get yourself stable for a few years first. And then you can buy your toys. And if you want to go buy supercars because you're making $1 million a year, so be it. As long as you're responsible about it. If you want to spend $500,000 on a car, make sure you have 2 or 3 million in the bank and your bills are paid. And it's not like you have all these floating debts and you're living on credit cards, and you made a good day in trading and you decide to take that and go buy a supercar with it because you had like some crazy trade you did and you made 2 or 300K in one day. Because that's realistic, and that's how it works, right? Don't go on a, even if you made 10 grand in a day, and that's a big day for you, don't take $1,000 and party. Like, go get like a Caesar salad at a place for like $13, get a nice Caesar salad, tell your friends you want to go out, have 2 drinks, $25 on the town, you're celebrating, maybe even buy a round for the boys or the girls, whatever. And it's like, okay, I made 10 grand, don't go blow 1,000 of it. Like, just reasonable life expectations. I shouldn't have to give this speech, but I do need to, because in day trading, there's a very cyclical thing where it's like, we make tons of money, so we want to spend lots of money. No, be responsible. Put that money in the bank, save it, invest it, open up a tax-free savings account, put it in GICs, government insured cash bonds, things like that. Just like, be smart with your money. So that's important too. Another mental analysis cue here is that I see a lot of people who they can get suicidal over day trading. They can doubt themselves a lot. That's probably the number one thing. You see people where they go through like the valley of disappointment, and you guys can look up valley of disappointment. I do talk about it in my courses, so I'm not going to get into that. But they go through the valley of disappointment, and they're studying for 3 months, 4 months, and everything feels so good, and they're progressing, and then they go through a funk. So month 5, 6, 7, it's like, it feels like they're getting worse. They've learned too much. It's information overload. Performance is going down. You get into a lot of these super high and super low cues in day trading. It's constant roller coaster. It's like, no matter what you're doing, day trading is a roller coaster. So you have to be aware of that. You have to be aware that I am going to go through times where I feel like I'm progressing really good, and be mindful that in a few weeks, I might feel really bad because I've made a lot of bad decisions and I feel like I'm not learning and everything's not making sense. You have to have a community to support you. That's where community is so important. Like we talked about community in chapter 1. This is going to come back to chapter 1, where community is so important. So you can say, guys, I'm having a down day. What do you do? Just friends to talk to. Maybe you don't trade. Maybe your trading day isn't actually trading, but it's just getting through some of these funks and talking to other people inside your community, reaching out to me in Discord and saying, Cotton, man, like, dude, I'm having a tough day. Like, everything's wrong. I've had a bad couple weeks. I can't pay my bills. Like, I'm really frustrated and stressed out. What can I do? And if I can't answer you because I get literally 100, 200, 300, 400 messages a day and I rarely get to answer, maybe one of the coaches can help, or maybe you can join one of the higher tiers on Patreon and just ask them and talk to them and go into a mentorship program with us. Or like, there's ways. You can just talk to the community in an open platform. You can message me. You can message the coaches. You can go into like mentorship, like I said, or the higher tiers and talk to those people. Like, there's ways. Don't deal with it on your own. It's really important to understand that, there are people here to help you and listen. And sometimes it's just as much as a good shoulder to cry on or someone to listen to. And we're here for you. We're here for that as a community. We'll help you through it. And don't give up, because there's a lot of highs and lows inside of day trading. I see it all the time. So, mental analysis is this very crazy balance between keeping yourself aligned and having realistic expectations and creating a healthy life, because you're your own boss in this field. So there's no one to keep you in check. So you have to create those healthy cues. You have to create that progressive lifestyle. You have to be able to sit there and say, like, look, I have the systems I need. I have financial money in the bank for when there's rainy days. And I have a community of friends who are there to pick me up when I'm just feeling bad. So that's like some of the biggest stuff that I see. And yeah, it's really like a high and low type of field. So you have to do your best to kind of stay in the middle, not get too crazy high when things are high, And also don't fall too hard when things are low. Kind of just sway in between a little bit. And when you go down, use community to help. And when or money that you've left in the bank, have those buffers. And then when you go high, don't go and overindulge, which would risk the bottom side, right? Like staying right in that middle point. Because like I said, I get tons of people come to me and they just go through these funks, and it's really important to be mindful about them. So mental analysis as a whole is about living a better life. And there's not a lot of do this types of tips. More, this is me giving you guys information, guys and gals, giving you information and advice from someone who's been doing this for a long time and how I would navigate and guide myself. So hopefully that helps chapter 5, and let's move on to the next. Okay, here we are, chapter 6. Chapter 6 I want to do a little differently than I originally thought. I want to go over some examples and kind of quick strategies on how to trade, just as a quick look at, originally this was supposed to be, what does the career look like? And what does the day-to-day look like? So I want to change up what I originally thought I was going to do, which was going to be kind of IRL footage walking around. I'm going to make a different video for that. In this video, I kind of want to just take some trades or just show how I trade a little bit, just some quick strategies. So people have an idea of what the career looks like from an actual technical standpoint. And then we can get to it. So we've gone through a lot of content in this guide. We've gone through how to use a community in day trading and why it's so important, why we learn TA, how to learn it, softwares and exchanges we use, examples of what the day looks like. So we did the office walkthrough and all that, mental analysis and how important that is. And now just living each day, day to day. So I didn't want to make this guide just focused on technical analysis, because you can't learn technical analysis from one guide. All I can do is show you the resources where you can learn, which are my resources, and then say, look, you've got a long road ahead of you. Let's be realistic here, and let's actually get some proper work done. So now what we're going to do is we're going to take a look at some trading. So what I'm going to do here is I'm just going to take my camera, make it a bit smaller, and I'm going to show you what it looks like. So you're in your office and you're about to day trade, and this is kind of the stuff you're going to be doing every single day. So if I had a blank chart, I'm just going to remove all drawings. What I need to do, what the first part of my job to do is to understand where whatever I'm trading. Today we're using Bitcoin, where Bitcoin is doing and what it's been doing. So I use color codes for everything. It helps me visually communicate the different time frames that I've marked this on. So if I'm, somewhere on, say, like I don't know, a 1 hour time frame, I have a green line. Well, green for me is supposed to be 15. So if I'm on the 1 hour time frame, I can say, oh, look, here's a green line. It means I marked this on a 15-minute chart. So we need to color code things. So the first thing I'm going to do every day when I walk in to do day trading is I'm just going to kind of set out some ground expectations. These are weekly time frames, so we want to change it to the weekly color, which I use purple for. So we've got some weekly time frames here that we have, and now we need to go and kind of say, what are the opportunities on the day? So we've got weekly time frames, we've got daily. Daily would be red. We don't really need anything marked here on the dailies. Maybe this one as a daily might be nice. So what I'm doing right now is I'm marking the bodies of candles as what I call hold levels. So my job here is to start marking out by colors and by different areas on the chart. My job is to start to understand where this thing can go next. So every day, this is what I'm doing. And I have to kind of use my best judgment and my best ability here as a trader to do this. So I need to start up here and say, okay, well, this 4 hours tested there. So I need to move on to this one here. And so that's tested right there. So I need to move on to this next one here. And that one was tested there. So now I need to go right here. And this looks like kind of the final target for Bitcoin right now. So I would kind of try to set my first trade in and around this area. And I know now on my screen that I've got a red line here. That's a daily level that was marked. The yellow is a 4 hour, and this purple is a weekly. And you can see this weekly had been getting hit here and ultimately had fell and collapsed down much lower in the charts here. And then we followed that trail of levels all the way from the top to here. So I've kind of got like my first good expectation, a really nice short. So for example, if I was to take this trade here, short this down to this level here, which is what I think I'll do, I'll use, if I'm going to use $1,000 of leverage and I'm doing this on 100x, that would be an $8,000 profit. If I'm using 2,500, that would be a $20,000 profit. Typically, I'll use more like $5,000 or $10,000 on leverage. So at $5,000, this would be a $40,000 profit. On $10,000 of leverage, this would be an $80,000 profit. So that's kind of just like what I would expect to make based on how much money I'm willing to put on this trade. And then I would gauge how much money I'm putting on this trade based on how much I like this position. I wanted to take the trade, but I thought it was a subpar level because it was like, well, it might hit this, but it might go deeper into like say like a 1 hour level up here. Maybe it's going to go all the way up here to this 1 hour level. I'm going to mark that as blue, so I know it's a 1 hour level. Maybe it's going to go all the way up here to this 1 hour level, or even right here, or maybe up here. Like there's different spots this thing could go. So let's just mark it here, for example. If it's going to go up here, and there's a high chance that it's going to go up there, because I think that I may use a smaller amount of money on this yellow level. Instead of using $10,000, I may just use $1,000. And then I might use $2,500 on this. And then as it goes deeper and deeper into the levels, I might scale up. Or if I really love this 4 hour level here, this yellow level, then I would use that, and I would say, okay, well, that's great. Let's use a big amount of margin on this level and hope we can make 80 grand. And then that way I don't have to work for the rest of the month. So you can get into scenarios in this, but this is very far in your career. But this is maybe good motivation for people, or something where you can say, hey, maybe after 3 or 4 years of studying and practicing, this is a level I can get to where I can make $80,000 on one trade in a month. And that's realistic for day traders, but some people stop there and they don't work for 3 weeks. And some people, this happens over the course of 2 days, and then the next 2 days they're back at it, they do it again. So what I'm doing here is I'm starting to mark out different levels. So I want to start from highest time frame down. So you notice we started with the weekly, we marked the daily, we marked the 4 hour level here. Actually, I think this was a 1 hour level. I think we might've made a mistake on that one. So this is actually a 1 hour level. We need to readjust this to a 1 hour level. That was actually incorrect by me. So here's a 1 hour level. The 4 hour level would actually be right here. So let's move that. I think I just clicked the wrong time frame earlier in the video. So 4 hour level, 1 hour level. This 1 hour level is actually making a lot more sense now. I would go after this 4 hour level. This 1 hour level makes a lot of sense. So we've got the 1 hour level. Next, I'm going to go down to the 15-minute level. I kind of want to just see if there's any untested levels here. So let's mark this green before we start, right? And so this is just what I'm going to do every single day, and kind of a strategy that I would employ people to use. So this is hit right there. So then we're going to go to the next level. And in this specific video, we're using, these are what's called hold levels and reverse levels is what I'm using. So you'll learn about that in level 5 and 6 of my courses. So this was hit, and then we got to go to this next one, which would be the body of this next candle right here, which would be that one hit there. And we have a backside here, which would also be a combination level. So there's nothing there. So I might want to look inside of here. So what about this as an origin level? It could become an origin level in the future, but I'm not too concerned about that. The only other thing I might want to do is come inside of here and say, okay, is this level tested? You use the wick or the body, either or is tested. That is tested, so we can't use that. This one up here is tested, which leads you to the next one right here. You kind of follow the trail of your eyes, right? Or if this level is tested here, what's the next closest level on the chart? It would be here. If it was in this candlestick here, it would just be the next level to be tested, the highest price in this point. So, if you the choice between this 2 candles right here and this one right here, well, this one's higher in price, which is a greedier target, which is what we would use. So now we kind of have a few different levels here, and we got to color code this to the 5-minute level so that when we go back to our larger picture view here, where we can see kind of everything happening, we can just look at this and we can be like, okay, what do these lines mean? Okay, well, that's a 5-minute level. That's an hourly level because of the color. That's a 4 hour, and this is a daily, right? So now we have like a very clear explanation and a quite a very easy to understand expansion of these levels. So this is like a nice strategy that I like to use. I like to kind of mark the highest time frame levels down, and this is a good strategy for newer traders to do, to start testing their abilities as a trader. You start with the highest time frames down, mark the bodies and wicks, whichever one is tested. And maybe we should write kind of like a rule set here for people. So go like this. Number 1, start highest time frame. Start with highest time frame and move down 1 time frame at a time. It's not really great English. I'm sure we could brevity that, but that's okay for now. And let's make this maybe just a really nice and small text so people can see it on the screen. The number 1 thing we do, maybe let's make it a little bit bigger. Number 1 thing we do is start with the highest time frame down. So that's what you just saw me do there. Number 2 thing is we mark hold levels. We mark hold levels, wicks or bodies. The wick is going to be the first test of it. The body is the greedier point of that. And what I would say in regards to that is if you mark the wick of a candle, you're marking the entire range of the level. So the level range, which you can learn about ranges in my courses, but the level range exists from the wick all the way to the body. And then inside the body is the smaller ranges. So for example, if this yellow piece right here, this wick of this candle was the entire range of this all the way up to here, right? That's the range of that 4 hour candle. The testing of the body of this candle would mean that you're testing the greedier part of the 4 hour and the higher part of the next range. That's the way it works. So that if we were to go to the 1 hour, which would be the next time frame down, then we can say, oh, here's the range of that hourly would be all the way from here to here. So if you said we're testing the hourly level, technically you would go into this 4 hour and you would test the wick of that 1 hour, and that would stop the move right there. Or if you think it's going to go to a 5 or a 15 or something lower, you would go to the body of the hourly and you'd start to move down into those time frames. So this body of this hourly is actually the same thing as that 15. So there's no difference there because it's the same candle. As you can see, the body of the hourly is the same as the body of the 15. But if we go into the 5, now we have all the way from this right here, which is technically tested. But after seeing all those reverse levels that we did see in the past chart there, we can say that it's probably going after this here. So I would use a larger amount of leverage on this level. And so when you're looking at these time frames down and you're kind of doing this, we mark hold levels, wicks or bodies. Now you know why. We mark hold levels, wicks or bodies, start with the wick, but understand the body is the greediest point of that time frame. That meaning that specific time frame, right? So that meaning that time frame as the 4 hour. That's the greediest part of the 4 hour, not the greediest part of the entire range. Because remember, this range exists from this yellow line right here all the way to actually the top of this right here, 4 to 4. But then we wouldn't take a trade on that level. We would take a trade on the greediest part inside the range, which would be this 5-minute level here at 23,041. So that's kind of the first two things we do. A good like starting strategy for when you're looking to take trades and when you're looking to actually get these positions. That's how you do it. And then what we need to do next is start to mark trends. So again, we want to start from the highest time frame. So we've already made a mistake here. I started on the 4 hour. I'm just going to delete this. I'm going to go to the weekly. We're not going to have a weekly trend here. We will actually from this to this here, and we're always using accumulation to accumulation on the top side and distribution to distribution on the bottom side. So we got accumulation there. We want to go over to the daily levels, and then we can mark ulterior trend right here, which is going to be red. We're doing the same thing, but with trends now, right? Now we're going to go to the 4 hour, and you can see how this trend has been respected pretty through and through on this trade, right? Like you can see that trend is actually getting respected very well. In this case, I want to mark a secondary trend, which is this candle here to this right here, which would be your first 4 hour trend. Now you're going to learn about trends and why I'm marking this one in a future lesson, but then I'm going to mark it to there, and I'm going to delete this daily because I want to take the greedier trend. This is almost like the same thing we just did with those levels and saying there's a range inside the levels. Well, there's a range inside your trends as well. So now instead of saying, hey, I want to buy this part of the 4 hour or this body of the 4 hour, I want to go into the 1 hour hold level. Like let's zoom this in. Instead of buying, let's get rid of that. Instead of buying this part of the 4 hour level, maybe I want to target the 1 hour level. And inside that, I think we can go all the way to the 5. So you'd be doing the same thing with these trends by saying this yellow one here is equal to this red one here. So if this 4 hour here were the first part of the range, this red one here would be that first part of the range. So I'm just going to delete that because I don't need it. I'm not taking a trade there. And now I can say, okay, I've got a pretty good trend. Look at how well this thing has been respected from here to here, right? From that accumulation to accumulation candle, the trend held here. It got a second spot here that it held down, and it's going to move here. So now I've got a very interesting kind of multiplier, modifier, not a multiplier, maybe consider this a modifier on the chart. Now, if we were to go straight up today and get a pretty big rip, I think it would be wise to take this level because it's close enough to the trend that you can do something like this, where you deep dive the trend and then you come back and reject the move. So you go a little bit over the trend, you never hard close a trend, but then you reject the move, therefore holding this trend back in the future, right? And then you can maybe come up like this and do the same thing here and then here. And if you were to target at this point, that's where that trend would break, when you're too far over top of that trend. But this is like a really nice way to take that trade. So if this thing were to start moving up really fast today, I think I would like this level even more because it has a great confluence with being a 5-minute hold level that can support trends still. But if we were going to sit here and go like this and come back up and go down like this, and we're kind of hitting this trend at this point, I would probably just stick to this hourly level right here. Anything higher than that, I would be worried about hitting this 5-minute, coming, holding this trend, and then starting to move up and ladder, because this little time section right here where you start laddering over top of trend, that's going to hard close it on those bigger time frames like that 4 hour. Now we're getting a little far ahead of ourselves in terms of technical analysis for like a comprehensive guide beginner's course, But this kind of creates the queue of events to show you why we need to mark hold levels and why we need to mark trends. So now I can sit here and say, okay, based on what time of the day this hits, whether it's here or whether it's out here, whenever this trend is breaking, I need to know the levels that are close to that can say, hey, this is a little bit over top of trend. We can hit that level and still move down. If we were all the way out here, for example, there's no way you're going to hit this trend, move up to this level and be like, oh, we just hit that level. Let's close trend now. No, because by the time it starts to sink, this is actually going to create a hard close on that time frame. So you're going to have a candle opening over top of that trend on an hourly or 4-hour time frame. So that's kind of our next step in what we need to do is to, number 3 is to mark our trends and see the relationship between them and the levels nearby. It's a little bit of choppy English, but that's I think everybody gets it. We don't need to do that. So this is like a really nice strategy to really kind of refine your technical analysis in a nice way where you can say like, here, I got levels, I got trends. These are going to be smart buy spots where you can take some of those. And then number 4 is you monitor your trade. And number 4, the fourth thing you would do now is once you're in that trade, because you've done all your hold level work or your levels work and your trends work. And by the way, that's all we use is levels and trends. Once you've done all that work, now you can just say, it's time to monitor that trade. So if you remember back to chapter 2, I believe it was, we talked about the 3 lanes of day trading. So what we did just now is a lot of PA, procedural analysis, everything that can happen before the trade. So we did a lot of PA here. That's, remember, there's 3 lanes in trading. The first lane, which is everything before the trade, what's happening during the trade, which is when we are going to be hitting these levels and trends, and then what happens after the trade. So we've covered by marking out all of our levels, all of our trends, the expectations we've covered that procedural analysis there. We've covered the first lane of trading on the day. So lane 1, the first lane of trading is done. The next part of trading is what we would do is we would monitor the trade as it's happening. So if we have our orders set, say right here, and this thing starts moving up like crazy, I'm just going to give out 2 different scenarios. Maybe you get to this trend, you hit this trend, you go right up here, you hit your trade, it starts to pull back. Now you're in lane 2. So now you've got your trade. It's in a slight, like a little bit of profits. You've selected a good target, something that's smart, that makes sense. Trade starts to pull back. You're now in your second lane, which is comparative analysis. So now what we need to do is we need to compare the events of what's happening. So that's where we're going to go through a couple different little scenarios here. So what's going to happen here is you've entered your trade. Great. Now, one of 2 things can happen. Number 1, it starts to fall down and you have kind of this slow drop like this. At this point, I would say, uh-oh, if we stay above this trend for too long, if we're here for like an hour, 2 hours, guess what? If we were to go over to this 4-hour time frame, eventually, if we keep staying over top of this trend, you're going to have a 4-hour candle hard close here. And it's the bottom of that candle that you care about hard closing. It doesn't matter if the candle's halfway between like this. This is not a hard close. This entire candle, the bottom side of the body needs to be over the entire trend. So that's a hard close. That's a hard close. That looks like a hard close. That is not a hard close. You see where you just get that little tiny corner of it over. Even that is not a hard close. That is a hard close. Such a small, precise, minute thing, but a critical difference in why accuracy is so important in what we do. So now you're gonna have a couple different outcomes, like I said. And the first outcome here is comparatively, we need to compare where our target hit and we took our trade versus the events that are happening. So if this were happening like I showed you, and you're holding over top of that trend, I would say, oh, okay, I need to get out of this trade and lock up my profits. It's only 40%. That's fine. This thing's about to rip up. I need to get out of this and maybe even consider switching my position into a long. So I need to take my short position that was right here. I shorted this and I need to go here and I need to exit that short position as this is holding. And I need to open up a new long to take this next level up to there. And then I can make my percentages there. So that's scenario 1 where we're inside of lane 2 of the trade and we're actually going and saying, how do we manage this trade? The next scenario that could happen in this trade is this thing starts sinking like this and you kind of get to this trend and you're starting to fall underneath it and you're going to like this. And this would maybe be a hold level that you would use. Like you might want to go and do something like this right here. This is a hold level. If you're getting underneath this trend, but this hold level is holding, that's fine. You want to stay in this trade. You want to stay in this trade to see if that can collapse because it might come up here again like this and then it might break straight down and then you're in a sick trade, right? Or it might just go straight below, but really this trend is kind of the controller of this trade. So In the first scenario, it's closing over trend and we need to get out of the trade and kind of flip our positions. In the second scenario, it's actually losing its trend. So it's like these candles here where it went up, it tried to break and it fell down. It went up, it tried to break and it fell down. It's that scenario, and you're going to have a huge trade on your hands where you're going to be making, if you're using 100x leverage like I do, then you're going to be making, 200%, 300%, 4 or 5, 800%. So now that's this thing. It's time to monitor that trade, and I'm going to put comparative. Oh no, we did the cap lock error. Okay, that's fine. That's fine. Reset. Comparative analysis. Oh God, I can't spell. So now we need to do that comparative analysis. So that's how you would manage that trade. And then the third lane of that trade just is that's risk assessment, I should say, that turns into comparative analysis, because you're assessing the risk and also moving into comparative analysis. And then you start over on the bottom. So that should give you like a really good grasp on, okay, here's how you manage the trade. This is what you do during the trade, and this is what it looks like every single day. So we mark out our expectations. We're in this trade, and we need to compare that to those events, right? So now we can delete this, we can delete that, go back to our 4 hour, make sure we just have a few levels and trends. And now we have things that we are supposed to do, and we know what exactly to do now once these levels get hit, right? And then the cycle starts over again. So this is kind of like a really nice 1, 2, 3, 4 strategy that's easy to adopt for any new or older trader who's been doing this for a long time or who's just starting. This is a really easy to adopt strategy that allows you to understand this is the way it should look every time we trade. We mark our levels, we mark our trends, and then we do our analysis. Now, I did a very pulled back, stripped down version of analysis. I'm not going into all the different things that I go into. You can learn those in my courses. And then you can add that to your toolkit where you're doing even more crazy analysis, and that's fine. But for the purpose of this video, it's just like a nice quick strategy for people to say, oh, this is like a nice kind of 1, 2, 3, 4 routine to get into. And then you can add on top of it as you get better and better and better. Remember, never indicators, never any of that stuff. And this is like a really great way to just have a nice, well-rounded strategy. It's not the ultimate strategy, but it's a nice, well-rounded way to look at the charts. A nice, well-rounded kind of, this is what I need to do every time I day trade. So I hope that helps. And I think that's kind of it for chapter 6 here. Let me just take a look at my list, make sure there's nothing else. Living each day for chapter 6, day to day. This is what we do every single day, day to day. You do your charts just like I did up here. This is what we do every day. And then we already talked about earlier in the videos in chapter 4, kind of what it looks like afterwards. So I've done this for a few hours now. I'll touch back on that a little bit. I've done this for a few hours now. I've made my money. Time to take a break, reset, enjoy my day. Have a great dinner, have a great lunch, be healthy, feel good, maybe do some shopping. I don't know, maybe I want a new pair of sunglasses. I like my sunglasses. Whatever your fancy is. You go do your thing, you get your sunglasses, do whatever you want, man. And then it's like, enjoy your day, go to sleep, wake up rested, rinse, repeat every day. And I hope this comprehensive guide has helped a lot of people. Make sure to subscribe to the channel if you haven't already. Make sure to follow, like the video, thumbs up, do all that stuff for me. Thanks. Yeah. And then social media, do all that jazz, follow. Good. We're done. Got that out of the way. And in the very bottom of this video, in the description, you're going to see a ton of resources. So I will put dozens and dozens of links, everything from what exchange to use, to where the courses are, to links to the trading journal that we talked about earlier in this video. Every resource I can think of, this is just going to act as one big dump file for those resources. So make sure you check out the section. Put in the comments what you liked about this video, what you didn't like. Let me know. Just give me your feedback. Plus, comments are good for the algorithm. So pump it up, everybody. Anyways, see you later. Cheers.